Ladies and gentlemen, good day and welcome to the Q4 FY26 conference call of Manba Finance Limited, hosted by Valorem Advisors. As a reminder, all participant lines will be in the listen-only mode. There will be an opportunity for you to ask questions after the presentation concludes. Should you need any assistance during this conference, please signal an operator by pressing star and then 0 on your touch-tone telephones. Please note that this conference is being recorded. I now hand the conference over to Ms. Purvangi Jain from Valorem Advisors. Thank you, and over to you, ma'am.
Thank you. Good afternoon, everyone, and a very warm welcome to you all. My name is Purvangi Jain from Valorem Advisors. We represent the investor relations of Manba Finance Limited. On behalf of the company and Valorem Advisors, I would like to thank you all for participating in the company's earnings conference call for the fourth quarter and full year ended of the financial year 2026. Before we begin, let me mention a short cautionary statement. Some of the statements made in today's earnings call may be forward-looking in nature. Such forward-looking statements are subject to risk and uncertainty, which could cause actual results to differ from those anticipated. Such statements are based on management's belief as well as assumptions made by and information currently available to the management. Audiences are cautioned not to place any undue reliance on these forward-looking statements in making any investment decision. The purpose of today's earnings call is purely to educate and bring awareness about the company's fundamental business and financial quarter under review. Let me now introduce you to the management participating with us in today's earnings call and hand it over to them for their opening remarks. We have with us Mr. Manish Shah, Managing Director, and Mr. Jay Mohta, Executive Director and Chief Financial Officer. Without any delay, I request Mr. Manish Shah to start with his opening remarks. Thank you, and over to you, sir.
Yeah. Good afternoon, everyone, and thank you for joining our earnings call today to discuss the performance for the fourth quarter ended financial year 2026. I would also like to thank Valorem Advisors for hosting this earnings call. Let me first start by giving a brief overview of the company and operational highlights, followed by which our CFO will brief you on the financial performance for the fourth quarter and financial year 2026. Manba Finance Limited is an NBFC offering a range of financial solutions, including loans to new two-wheeler, three-wheeler, used car, small business loan, top-up loan, and used two-wheeler loans. We are currently operating in 130 locations across 6 states, precisely Maharashtra, Gujarat, Rajasthan, MP, Chhattisgarh, and UP. Our distribution network includes over 1,500 plus dealers. We have secured funding from 3 public sector, 10 private sector and small finance bank, and 25 NBFCs. We have total team size of approximately 1,800 employees, out of which more than 900 plus employees are part of sales team. Our internal collection team ensures low NPA in the industry. The company commands one of the fastest turnaround time for loan sanction in the industry, with over 60% of our loans sanctioned in 1 minute and 92% sanctioned within a day. During the quarter, we further strengthened our used two-wheeler ecosystem through the onboarding of additional dealers. We also entered into a strategic MOU with the TVS Motor Company, enabling deeper collaboration across the dealer ecosystem and enhancing our reach in three-wheeler financing segment. Further, during the year, company declared an interim dividend of 7.5% per equity share on a face value of rupees 10 and has also recommended final dividend of 2.5% per equity share, subject to shareholders' approval, reflecting our continued commitment towards shareholder value creation. Looking forward, we remain confident in our ability to deliver sustainable and profitable growth and long-term value to our stakeholders. Now I request our Executive Director and CFO, Mr. Jay Mohta, to brief you on financial performance for the period under review. Over to Jay.
Thank you, Manish sir. Let me provide a brief overview of the financial performance for the fourth quarter and the full year full financial year 2026. For the fourth quarter under review, net interest income stood at rupees 50 crore, registering a significant growth of 34% year-on-year. Profit after tax for the quarter increased by 39% year-on-year to rupees 11 crore, reflecting a healthy profitability and continued operational momentum. For the financial year 2026, net interest income stood at rupees 162 crore, reflecting a healthy growth of 24% year-on-year, supported by a steady growth and improving funding efficiency. Profitability remained strong during the year, with net interest margin at 13.63%, supported by a gross yield of 22.85%. Profit after tax for the financial year 2026 stood at rupees 45 crore, registering a growth of 20% year-on-year, reflecting our continued focus on the sustainable and profitable expansion. As of 31st March 2026, our asset under management stood at 1,713 crore, reflecting a robust year-on-year growth of 29%. Our balance sheet size stood at 1,979 crore. During the period, we have achieved a disbursement of rupees 977 crore compared to rupees 842 crore in the same period last year. The strong performance was primarily driven by encouraging demand in the two-wheeler segment, supported by the continued expansion of our dealer network and addition to the new location during the quarter. During the quarter, we have also added around 28,500 new customers, taking our total live customer base over 2.20 lakh. We further expanded our presence across Uttar Pradesh, Madhya Pradesh and Rajasthan, strengthening our portfolio in these states. Turning to the portfolio mix, the split between our MFL business, co-lending partnership, DA and BC arrangement stood at 91.84%, 2.62%, 4.43% and 1.11% respectively. Talking about the product mix for the period under review, the two-wheeler accounted for 84.5%, small business loan for 4.93%, top-up loan 4.70%, three-wheeler 3.28% and used vehicle loan 1.50%. This clearly demonstrates that over 95% of our portfolio remains secure. On the liability side, we continue to enhance our funding profile with total fund raise of rupees 420 crore during the quarter. This includes sanction of rupees 100 crore term loan from the SBI, successful issuance of 50 crore from the NCD, and onboarding a new lending partner such as Proteum Finance, Godrej Housing Finance. Also, for the full year, it is FY26, total fund raise stood at rupees 1,265 crore, of which the term loan accounted approximately 651 crore, while NCD issuance was 365 crore. These developments further diversify our borrowing mix and reinforce the lender confidence in our operating model and growth trajectory. As of 31st March 2026, the Stage 1 assets stood at 1,601 crore, accounting for 93.49% of the total portfolio and reflecting a strong asset quality. Stage 2 assets were rupees 54 crore of 3.18% of the gross asset and remained lower compared to the previous quarter. Gross Stage 3 assets stood at 57 crore, that is 3.33% of the gross asset, improving from 3.38% in December 2025, while the net Stage 3 asset is declined to 2.46% from 2.57%. Our asset quality continues to remain well under control. As at the end of the quarter, gross NPA stood at 3.33% and net NPA was 2.46%. Credit cost remained extremely stable with the losses consistently around 1%, reaffirming the strength of our collection engine and the quality of our underwriting process. On the provisioning front, we continue to maintain prudent trends. Our expected credit loss provision stood at rupees 23 crore compared to IRAC requirement of 14 crore, resulting in a healthy excess buffer. Further, our capital adequacy ratio remained healthy at 24.46%, well above the regulatory requirement, providing ample headroom to the support of future growth. Our credit profile remains well supported by the external rating, with CARE rating assigning us BBB+ positive outlook and acute rating assigning us A-. On the funding side, our average cost of borrowing is currently stands at 10.64%, an improvement from 10.80% last year, which has declined and benefiting from the improved credit and favorable market conditions. Our return ratio also continued to improve, with ROE increase from 10.25% in FY25 to 11.65% in FY26, while ROA improved from 2.58% to 2.63%, reflecting stronger profitability and improved operating efficiency. Overall, we believe the company remains well positioned for the sustainable long-term growth supported by the strong momentum in the AUM and disbursement growth, strong asset quality, improving profitability metrics, a healthy capital position, and continued strengthening of our liability franchises. Going forward, we remain focused on the disciplined growth, deeper market penetration, prudent risk management, and delivering consistent value of our all stakeholders. With this, we can now open the floor for the question and answer session.
Thank you very much, sir. Ladies and gentlemen, we will now begin with the question and answer session. Anyone who wishes to ask a question may enter star followed by 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may enter star and 2. Participants are requested to please use only handsets while asking a question. We will wait for a moment while the question queue assembles. The first question is from the line of Gulshan Singh from Sunidhi Securities. Please go ahead.
Yeah, good afternoon, sir. I'm audible?
Yeah.
Yeah, thank you, sir. So, sir, I have two questions. The first question is on a loan book side. So, as you mentioned, like we have mainly 84% of our loan from the two-wheeler side. So, my question is regarding in future, what kind of a split we are looking like? We will heavily skew toward this two-wheeler, or we will reduce this dependency? And similar on also, I'm just wanted to know about your geographical expansion, like what kind of a new geography we are looking to expand, sir?
Yeah. So, answer to your first question is that gradually our dependency on one product of two-wheeler is reducing. Before 3 years, it was almost 97% two-wheeler. From there, it has come down to almost 84%. And going forward, the way we are becoming more, aggressive in the three-wheeler as well as used car, small business loan, and also we have started the MSME LAP also. So looking at all this thing as per our business plan, we are expecting that after 3 years, two-wheeler ratio will be around 65% and 35% will be other products. And answering to your second question about the geographical, yes, so before only Maharashtra was major contributing the business. Today, onboarding customers, it has from almost 58% of contribution from Maharashtra. It has come down to almost 40%. Now, Gujarat is also contributing around 27%. Rajasthan is contributing around 15%. And now, in this current year, we are going to focus more on UP and MP for, diversified growth as well as geographical growth. We are also, maybe in second quarter, we will start our operation in the Karnataka also. So this will further add, our geographical diversification.
Yeah, thank you, sir. Sir, my next question is regarding this AI. So right now we are seeing a lot of big banks and NBFC, they are using AI to improve their efficiency and in the loan distribution system. So also reducing their, we can say the cost and all the things. So how we are seeing these things, and also we are going to implement this thing in our process also, sir?
Yeah. So we have hired a team for the same, and initially we have started taking this benefit for the collection purpose. The customers who have been continuously by trend, it is showing that they are paying within a week's time after the bouncing. So we are not distributing those data to our callers, and that second hit we are doing the same way. Which are the days good for two-wheeler, which are the seasonal impact going on. So lot of, data learning is going on so far, and which will definitely help us. We are also coming up with the dynamic pricing only because of the AI support, that where, with the back-end working, and where we are coming to know that the loss in this particular loan transaction will be lesser than the normal loan transaction. There we are giving, some benefit to customers and sometimes some benefits to dealer for sourcing such kind of customers. So these are the few initiatives we have taken on the AI front.
Thank you, sir. And all the best for the future.
Yeah, thanks.
Thank you. Participants with questions may enter star followed by 1. The next question is from the line of Danish Shah, an individual investor. Please go ahead.
Good afternoon, sir. So first, congratulations.
Sir, I'm sorry, your voice is not very audible. Could you use your handset?
Yes. Now I'm audible?
Yes, sir. Please proceed. Thank you.
Yes. So first of all, congratulations for a very healthy set of numbers. My first question is regarding the AUM, sir. So the company has shown a 20% AUM growth. So wanted to understand what will be a sustainable growth rate for AUM going forward, sir.
Yeah, so, as a philosophy and as a strategy, company is focusing on 25 to 30% growth every year. And same as per our business plan also, it shows that same kind of growth we will be able to achieve this year also. And for that, you can say that we will end up around 2,300 to 2,400.
Okay, sir, noted. Yeah. So my next question is, are you planning for any strategic significance and business potential arising from, big OEMs like TVS going forward, or any other brand, any big brands?
Not exactly for two-wheeler, because two-wheeler, all the four very, very active and popular brands such as Honda, Hero, TVS and Suzuki, we are well connected, we are well penetrated across the location where we are. But as far as three-wheeler is concerned, we have an all-India tie-up with the TVS Motor Company, which is going to help us for the further penetration in three-wheeler. And rest all, these are the four two-wheeler brands which are predominantly doing good from years, and they keep on bringing more and more new variants also, new vehicles also. So our penetration will be in line of their new initiatives only.
Okay, sir. So one last question. So I just noticed, while is the provision coverage ratio has been increased for the company like from 24 to 26? Yeah,
so this is just to strengthen the balance sheet. Of course, our credit loss is around 1 to 1.25% only across the year at the AUM of 100 crore also and at the AUM 1700 crore also. But still, to overcome any kind of natural calamity or anything in the future, we by year, we are strengthening our PCR, and whenever, because this year also we had a good profitability, so we thought this is the right time, to provide more for the such kind of stage 3 assets and strengthen our balance sheet.
Got it, sir. Thank you so much, sir, and all the best.
Thank you. Participants with questions may enter star and 1 on your handset. The next question is from the line of Devansh Jain from Eternal Capital. Please go ahead.
Yeah, thank you so much for the opportunity, sir. So my first question was more on the financial side. So the GNP and NPS, as I see it, have remained largely stable, and despite a lot of aggressive geographic expansion into states like, I think, UP and MP. So are you seeing any warning indicators, or what I would like to know is how is the management tracking these relatively newer markets?
Yeah, you are absolutely. It's a very good question. I will like to say that all the new geography, we landed a little lesser IRR to get a very good profile customers. Because, in the new geography, it takes some time to create your collection bandwidth. Sales you can start on the day one, but the collection, it takes some time. So what we do, instead of 22% lending, we generally lend at 18 to 19% to new geography, where we will try to take good customers only. And that's the reason, our GNP and NNP are quite stable in spite of adding new geography.
Got it, sir. And I just wanted to understand, sir, now that the demographics have changed in West Bengal, the political stability is also going to come into play. So is there any plans to enter those markets? Because that is one market where these microfinance is very much required.
Yeah. So we are, studying, especially our Chief Business Officer and Executive Director, Monil Shah, is constantly in the, study and research on the new geography expansion. So first we will start with Karnataka, and later on, because as you rightly said, Kolkata is one of the biggest market for two-wheeler, especially for used two-wheeler also. So we are definitely we are looking at it, but not immediately. Second quarter we are definitely starting Karnataka. But maybe by end of this year or maybe in the next year we start looking at West Bengal.
Okay, thank you for the positive comment. And one last question, if I can. So the dealer count has increased sharply from around 1,200 to I think 1,650. So how much is the incremental disbursement growth coming from productivity and improvement versus the network expansion that is happening?
Yeah. So dealer addition is mainly because we, had added used two-wheeler, and so there are most of the, I will say around 200 plus dealers have been onboarded in the last quarter only, last 2 quarter only, I will say. So productivity is remained almost similar, but with this new counter where, placement is going on, and we are able to put our manpower also. So disbursement is also grown by almost 16% from the last year. But all this dealer expansion will definitely have a major impact in this coming year.
Okay, perfect. Thank you so much, sir. That's it from my side.
Thank you. The next question is from the line of Sampath, an individual investor. Please go ahead.
Sir, in the last earnings call, the management highlighted the MSME lab as an upcoming new launch product. So could you please share the current progress of the same?
Yeah. So this product is already started. We have already started the disbursement. And initially we have been started 2 branches, one at Mumbai and one at Pune. So almost all the hiring of the RMs, business manager, BCM, everything has been done. And disbursement at both the branches has started. And the response is also, we are getting a very good response also.
Okay, noted.
Sir, do you have any more questions?
No, I'm
okay.
done.
Thank you. Participants with questions may please enter star and 1. The next question is from the line of Rohit Arora, an investor. Please go ahead.
Hello, sir. Am I audible?
Yes, sir. Please go ahead.
Sir, what is our incremental cost of borrowing in Q4 FY26 in current Q1 FY27?
Yeah, so Jai, you take this. Incremental cost of borrowing.
Hello? Yeah, can you repeat the question?
Sir, incremental cost of borrowing in Q4 FY26 and Q1 FY27 currently?
So currently we are raising the funds at 10.50%.
Has it increased from Q3 FY26?
Huh?
Has it been increased from Q3 FY26?
No, it's a decreased.
From?
Hello?
Hello, sir, from?
I will just clarify that we are borrowing presently at 10.5%, and it has been almost reduced from our previous borrowing, which was around 11.25. So in last entire year, we will be able to reduce our borrowing cost by 1.10%, and because majorly we have done a PTC transaction is almost 9.75%. We got a SBI approval come disbursement of 100 crore rupees at only 10%. So my average cost of borrowing will further go down, and we are not borrowing anything more than 10.5.
Okay, sir. And sir, are we seeing any further reduction in cost of borrowing?
Yeah. So of course, on every milestone or every result, we are pushing all our lenders, making them understand, showing our performance, and trying for 20 paisa, 25 paisa, 50 paisa to reduce down in this quarter also. But of course, because of the external situation, it looks little difficult. But of course, yes, we will not at least borrow at a higher price. That is for sure.
Okay, sir. And sir, what are the yields on the MSME lab business which we have recently started?
Yeah, so yield is, we are, the gross yield is around 18 to 19% because it is a secured assets.
Yes. And sir, LTV?
LTV, it is, there are 2-3 schemes and all depend upon the person capacity of, we are not only depending on the value of the assets, we also see the paying capacity of the customer. So relatively on the valuation part, we go up to 60%.
60% and average ticket size, sir?
Average ticket size starts from 5 lakh to 20 lakhs.
Okay, sir. And are we looking to add more geographies?
Yeah, definitely, but not immediately. This quarter we will have only these 2 branches. Then in the next quarter we are going to start at Nasik and Ahmedabad.
And further expansion into...
I'm sorry, sir, could you return to the question queue, Mr. Arora?
Okay.
Thank you. The next question is from the line of Prashant Kumar from Sunidhi Securities and Finance. Please go ahead.
Yeah, thanks for the opportunity. Am I audible?
Yeah.
Yes.
Yeah. So my question is on asset quality trend in current macro challenging environment, especially the rise in fuel price and the company's higher concentration in vehicle financing. So are you seeing any early sign of a stress in borrower behavior, such as collection efficiency trend or overdue buckets or bounce rate in a specific customer segment or geography?
Yeah. So far not much because we are basically into 100 to 125 cc only, where these are the customers who buys this, who takes this loan for their basic necessity, for their main basic commuting from residence to office or from residence to school to drop their child. So they are cautious in repaying, and especially the amount of EMI is pretty low. It is around 3,500 to 4,000. Thirdly, we take a handsome down payment at the time of disbursement, that is around 20 to 25%. So customer equity is already there. So they will not be, be happy to that they surrender their vehicle or we may seize their vehicle. So far, the scenario has not disturbed this product. But yes, on a small business loan, we are becoming more cautious, and our rejection ratio we have been increased, and growth sector very enthusiastic environment is not there, so we are not very much focused on the small business loan because that is the only unsecured product company is having, and of course the outer limit of the AUM is only less than 5%. So far nothing much has been visible for the war situation which is going on, but of course yes, we have tightened our credit policy for new customers onboarding to take a precautionary measure.
Thank you, sir, for such an elaborative answer. And if I go some deeper, like could you provide some more color on customer profiling, like including income segment or occupation mix, or they are the first-time borrower or repeat customer?
Yeah. So as far as customer concerned, our 50% of the customers are salaried and 50% is self-employed. We focus more on owned house customers who are having their own house. So our 92% of our customers are having owned house. That has always helped us in better collection. As far as income part is concerned, we, this is a very small loan product. So we just take their income perfoise and all. We are not taking. We are taking this for all measures for small business loan. And as far as new to customers are concerned, we always restrict 35 to 40% of our total portfolio for the new to customers. So this all, and in that scenario also, whenever the customer is NTC, we restrict our LTV to 70 to 75%.
Okay, thank you so much, sir, and that's it from my side.
Thank you. The next question is from the line of Saket Kapoor from Kapoor Co. Please go ahead.
Namaskar, sir. Hope I'm audible.
Yes.
Sir, my question, I'm new to this organization, so I'm just scratching the surface in terms of trying to understand the model. And sir, firstly, sir, we are only financing to the ICE model and not into the EV space, or what portion of the EV two-wheeler segment can we look forward for financing, as there are lots of variations and there are many price variants also there?
Yeah. So we are into financing of both the variant ICE as well as EV, and our portfolio is always in the similarity of the industry. Today the industry contribution of EV in two-wheeler is around 7 to 8%, and same is reflecting in my portfolio also. As far as three-wheeler is concerned, we are more aggressive in the EV segment, and of our three-wheeler portfolio is around 50 crore. Out of that, almost 40 crore is EV. So we are well diversified, and we are well focused on EV products, especially in two-wheeler is concerned. iQube we are very focused. Bajaj Chetak we are focused. Ather we are focused. And as far as three-wheeler is concerned, Piaggio we are focused, Graves, and TVS Motor Company.
And so when we look at the risk profile, particularly EV as a space where technology is also changing rapidly, and then the component part of it is also in terms of that getting redundant quickly is also much higher. So what are the risks that we are aligning to the same, and then the NPAs in that segment also would be slightly higher than what because the resale price for, I think so, EV two-wheelers and all is much lesser than what the ICE engine would be. That is a more matured market.
Yes.
So what is your understanding?
So as far as two-wheelers are concerned, so far, whatever output has come as far as collection is concerned, it is better than ICE, I will say, because, they are very informed customers. They know that, taking this vehicle will not get that kind of speed, but they are taking it for the economy purpose. And mostly educated customers are, going forward to buy EV two-wheeler. So as far as EV two-wheeler is concerned, my NPS is only 1% after almost 3.5 years of operations. And as far as three-wheeler EV is concerned, where you are right, the customer profile are little, dicey, and if you will not have a better control on their cash flow, then there are possibility that you may end up in a high NPA or maybe more credit loss. Because, the usage of such a three-wheeler EV is in India, unfortunately, RTOs and all are not so strict, because they usually get a permission of 4 people, but they allow 10 to 12 people. So the usage and the depreciation of such vehicle, such auto rickshaw three-wheeler, is getting faster than what expected. And when they surrender such kind of vehicle, or we see such kind of vehicle, there is a huge loss. So absolutely, I will say that funding three-wheeler and collection of three-wheeler is always a very, very, challenging. And one should be very cautious, and that's the reason we are growing on a very, very slow pace, and on a very, very select OEM only we are going on.
Right, sir. So this space, sir, what should be our book likely for the end of the current year? I mean, how are we like to grow the book, which will be more towards the EV space? What should be the size? It would be around the same, the way the market is growing, or we will take extra leverage on the EV segment, as the variants are going to be much more than what the ICE is, and the entry level is also less. If we take today the type of example in case of Activa and TVS Activa, we find the entry level are above 1 lakh, whereas in the EV segment it ranges from 40,000-45,000 to in that range. So half of the prices. So that gives the ticket size also goes down, and hence the market might be more lucrative for you, sir. How is that understanding?
First of all, I will correct, no good two-wheeler is EV two-wheeler is available less than 1,25,000. So those are 45,000 rupees category of vehicle are unregistered vehicle. They are not from a reputed OEM brands. They are all assembled and imported from China. So this all are, and we are not into that kind of segment of financing. So now coming back to the original first question is that yes, we will definitely be aggressive in EV financing, especially we are getting a lot of comfort in iQube and Ether as far as two-wheeler is concerned, and we are, even our lending rate for the same product is also less than our ICE engine, other vehicles lending, and because of the performance, our NPAs are less than 1%. So we'll become more aggressive in the EV. As far as three-wheeler EV is concerned, recently we've been able to, strike 2 MOU where OEM, very renowned and very old OEM employee who are there in the market for many years, they promised us to take a 50% of hit of the POS amount outstanding at the time of the NPA or at the time of the seizing of the vehicle. So by getting this comfort, we will definitely become little aggressive in the three-wheeler EV space also. So, of course, the first, our goal will be to align with the industry growth of EV, and definitely we will grow in the EV financing sector more than the industry penetration.
Okay, sir. Thank you for your reply. Dhanyavad, sir.
Yeah.
Thank you. Participants with questions may enter star and 1. The next question is from the line of Mayuresh from Invest for Edu. Please go ahead.
Hello.
Yes, sir. Please proceed.
First of all, congratulations for good sales of number. And thank you for the opportunity, sir. Sir, my first question is on the TVS Motor partnership. Like, how is the partnership shaping up, and how meaningful can it be for our AUM growth? Are we looking at similar OEM or dealer-led partnership in the future, sir?
Yeah. So TVS Motor, this is an all-India MOU which we entered, and this MOU has been entered before almost 3 months. So in this 3 months, we will able to onboard 70 TVS dealers who are into three-wheeler distribution, and this is giving a lot of push to my three-wheeler book also, because there is a clear communication going from TVS Motor Company to each one of these dealers that Manba is very, very active and most ideal financer for three-wheeler, and this has helped us. They also have been given us a good subvention at the beginning of the transaction, as well as they are going to support us in the event of any credit loss also.
Got it, sir. And sir, my second question is on the portfolio mix. Like, are we seeing any change between new vehicle and used vehicle loan? How is this impacting ticket size, yield, and asset quality, sir? And also for used vehicle loan, what is the broad framework for deciding LTV?
Yeah. For used two-wheeler, right?
Yes, sir.
Yeah. So used two-wheeler, of course, the ticket size is to 60,000, whereas in the new it is around 80 to 85,000. The yield is also been different, where the new two-wheeler we are lending at around 21, whereas used two-wheeler we can lend at around 24 to 26 IRR. As far as the quality profile of the customers are concerned, of course, NTC is more than in used two-wheeler. It is around 50 to 55%. And as far as behavior of the customers are concerned for both the sector, new and used, so far, of course, the used two-wheeler penetration is not much, because our presence is only at 150 dealership, whereas our presence in the new two-wheeler dealership is around more than 1,200 plus. So, but yes, the first year performance of the used two-wheeler is very promising, and we are not showing that bigger credit loss. Then it will be maybe 1% or maybe 1.5 to 2% max.
Thank you. That's all from my side.
Thank you. The next question is from the line of Rohit Arora, an individual investor. Please go ahead.
Hello, sir.
Yes, sir. Please proceed.
Sir, what are the expected timelines of equity fundraise, which we talked about in previous con call?
Yeah. So in the previous con call also we have talked, you already discussed that it is in the targeted quarter is second or maybe third quarter. But looking into the current scenario, it can go into the third or maybe the fourth quarter. So, but yes, there will be definitely new fundraise will be happening this year.
And sir, are we comfortable to raise funds at low valuation, such as are we trading at right now?
See, that's the reason I'm telling you that we may postpone for 3 to 4 months. Once this geographic problem, war issues get settled, because we were trading at around 140 to 150 before at the time of February, before all this issue has come up. So once this we may be started trading at around 135 or 150 rupees, where we will be able to raise the fund.
And sir, what debt to equity level are we comfortable?
Below 4.
Okay, sir. Thank you, sir.
Thank you. The next question is from the line of Sagar Shah from Spark PWM. Please go ahead.
Yeah. First of all, thank you for the opportunity and many congratulations, Manba, for excellent set of earnings actually. So my first question, sir, was related to that. Means we have achieved almost at around a 20 or 30% CAGR growth if we compare actually nearly in the last 3 years. And going forward from here, from around 1,710 crores of worth of AUM, in the next 2 to 3 years, what sort of, are you confident for even similar growth or maybe even higher, because as we have now more products as compared to last 3 years where we started? That is the first question. And sir, second question is, what is the portfolio mix that we are targeting in the next 2 to 3 years? Means what will be the portfolio mix between the two-wheelers, used two-wheelers, three-wheelers, and even the LAP portion which is coming on board now, which is a secure product and quite stable and you can say very low credit cost as compared to two-wheelers actually. So what kind of portfolio mix are we targeting? That is my second question.
Yeah. So answering to your first question, yes, of course, we have been, strengthening our team, and especially our CBO Monil Shah is working very hard on, further sales penetration. And we are quite sure that at least 30% growth year on year on an incremental AUM we will be able to achieve by adding the new geography and and of course we have added almost 4 new products to our portfolio. So growing should not be an issue for us because almost we are present at 6 states, especially when UP and MP is not penetrated so far. We are not even 1% market share in the UP. So there is a huge
right.
And in the MP also our market share is only 3%. So there is a huge scope in MP and UP. So and we are starting Karnataka also. So growth will not be a constraint for Manba. As far as answering your second question, yes, within a 3 years time, the two-wheeler portfolio will come down to almost 60-65%, where we are going to, in absolute number, it will always grow, but as percentage contribution is concerned, it will be around 65%. And we are focusing on top-up loan, personal loan, as well as used two-wheeler, as well as three-wheeler, because we are having a lot of new tie-ups also coming up. And as you rightly said, MSME LAP is also in next year will be very, very mature product, and it's also safe, it is secure also, and always been seen that credit loss in this product is less than the unsecured. So it will be a very, very ideal combination at this junction for the, putting the company on 3rd and 4th gear. From here, no looking back, because now we are well placed in the geography, as far as geography diversification is concerned, and as well as portfolio and product diversification is concerned.
Okay. So is it safe to assume, sir, that 60 to 65% will be two-wheeler loans, and the rest would comprise of three-wheelers, used car loans, small business loans, and personal loans? Is it correct?
Loan and MSME LAP. Yeah.
Yeah, MSME LAP. Okay. Fine. Thank you so much, sir, and all the best for the future.
Thank you.
Thank you. Participants with questions may enter star and 1. The next question is from the line of Prashant Kumar from Sunidhi Securities and Finance. Please go ahead.
Yeah, thank you, sir, for once again for giving us opportunity. And my question is on signing the MOU with the large OEM like TVS Motor. So, given the strategic nature of this partnership, are you seeing any deeper engagement from TVS ecosystem beyond this business sourcing, particularly in interest of taking any equity stake in Manba Finance, similar to the recent investment made by TVS Group in Jana Small Finance Bank?
That is not at this stage, but yes, this MOU has really helped us to reach out the not only three-wheeler dealer, but now we are getting help in reaching out the more and more two-wheeler dealers also, and we are getting more comfort. Dealers are also making us more preferred financer in the two-wheeler as far as TVS Motor is concerned. So we are in the first phase only. Whatever what you are talking, that kind of communication, nothing has been so far started.
Okay. Thank you.
Thank you. The next question is from the line of Jivit Mehta, an individual investor. Please go ahead. Mr. Mehta, you may proceed and ask your question.
Hello, audible?
Not really. Could you just speak up, please?
Hello, now?
Yes. Please proceed.
Okay. Thank you for the opportunity. My first question is, how do we process loans for the used car segment? Is it same as the two-wheeler loans, or is it different?
No, so the entire credit team is completely different as far as used car is concerned, because that is a complete different segment only. So sales team is also separate, credit is also separate, and as far as collection is concerned, that is also separate team. So the norms, the paying capacity, because the ticket size, two-wheeler is 80,000, here the ticket size is almost around 4 lakh rupees. So there is a complete different process and SOP we set for the used car.
And so is our turnaround time that fast in the used car, or is it a little slow there?
It is not exactly like a two-wheeler where, we have a 1 minute approval in the STP process. But yes, slow and steady we are growing. We are reducing our debt of approval. But here, the valuation of the vehicle is also important. And so it has come down to almost 3 hours. But further going, will definitely take initiative in reducing the debt.
Okay, so understood. My last question will be, what were the credit losses for this year? And was it similar to the previous year, or was it more than the previous year?
No, so credit loss was almost similar than the previous years. It is around 1.25%. 1.25% of my AUM.
Okay, so I think so it has increased around 0.25%.
Not 0.25 exactly, because my exact working is around 1.12. So by 10 bits maybe here.
Okay, so and on the industry side, we are seeing that the MFI industry is now going through a good cycle. So do you expect the some of the effect in coming into the two-wheeler industry, the two-wheeler financing industry as well?
Yeah, because if you see the last 6 months performance, especially after GST, so two-wheeler every month is growing as compared to the last year also, as compared to the previous best month also. In the April also, in spite of the current scenario, two-wheeler is the product which has been grown by almost 14%. So this is the similar trend we are seeing for May also, because today almost we are on 19th of the May. We are having the same level of growing logins for the two-wheeler. So as far as two-wheeler is concerned, it is going to be grow this year and coming years also.
Okay, sir. Okay, thank you for the opportunity, and all the best for the future.
Yeah, thanks.
Thank you. As there are no further questions from participants, I hand the floor over to the management for closing comments.
Yeah. So I thank all the participants in this earnings call. I hope we have been able to answer your questions satisfactorily. If you have any further questions or would like to know more about the company, please reach out to our IR managers at Valorum Advisors. And thank you, Valorum, for organizing this earning call. Thank you very much.
Thank you very much, sir. On behalf of Manba Finance Limited, that concludes this conference call. Thank you all for joining us, and you may now disconnect your lines. Thank you.